see the final nail in the coffin for momentum stocks or signs of life from The Walking Dead. Of course, financial markets are closed Friday for Good Friday, which will give everyone a break to gear up for next week. A week that investors will see a stream of earnings reports from these momentum stocks, giving them ammunition to either buy them or sell them off once again. Let's start with biotechs. Biotech stocks officially fell into bear market territory this week. The biotech ETF down more than 20% from its high in February. Now we get a look behind the curtain with earnings from the major biotech players. Amgen and Gilead kick off on Tuesday, with Celgene and Biogen IDEC reporting later in the week. Healthy earnings from Gilead Sciences could help turn the sector around. Analysts are expecting the company to report earnings per share of 88 cents for the quarter. That is significantly above the reported earnings of 48 cents a share a year ago. We'll also see if Amgen, another industry heavyweight, will beat the street. Analysts predicting earnings per share will come in at $1.93 for Q1. It's important to note that Amgen has beaten estimates in all of the past 4 quarters. At number 2, all those tech high flyers that have taken a beating may prove to investors they're worth a second look if their earnings reports are strong. Netflix is expected to come out on top. Analysts are expecting earnings per share of 83 cents. That's up from 5 cents a year ago. And the company projects it will add 2.3 million customers to its video streaming service, the biggest part of its business. Netflix releases its first quarter profits after the markets close Monday. Mobile ads expected to continue to drive strong revenue growth at Facebook when it reports first quarter results Wednesday. Last earnings season, Apple failed to live up to expectations. The company will be looking to put an end to its downward trend this time around. And your top story, will internet giant Alibaba be the exception to the new rule in the IPO market? Nearly every single IPO that's come to market since the roller coaster in the stock market has priced at the low end of its offering range. Sources tell Reuters that as soon as Monday, we will get pricing details from Alibaba, which is expected to be the biggest IPO in U.S. history. Alibaba powers 4/5 of all Chinese online shopping and posted a 66% increase in sales in the last quarter of 2013. So here's the question. Given the recent IPO weakness, will Alibaba look for a more conservative valuation, or will they go for broke? Investors in Yahoo will also pay close attention to the Alibaba details because it owns a 24% stake in that Chinese internet giant. We will be watching as well. And we'll also keep an eye on the culmination of Barry Diller's 2-year court fight as his streaming TV startup Aereo goes in front of the Supreme Court next week to fight copyright claims from CBS and ABC. You can follow us on Twitter at Reuters Insider and watch more videos at Reuters.com/ReutersTV. I'm Rhonda Schaffler. This is Reuters.